What's up, guys? Wade here. So I know we got a lot of super ATS fans out there. A lot of you guys have implemented the master pattern methodology in your trading with great success. You can see it in the comments below on all of our videos. So super awesome. Super happy for you guys. But I know there's still some of you guys out there that are struggling to implement the methodology. So what I've done on this video is a trade that I just got out of today. I basically took the liberty to record my thought process through one of the trades. This is one of the opportunities that I like, and I'm more of a higher time frame trader. I like to look for big moves and less trades is what I'm all about, particularly from my time zone here in California. So what I did is I recorded when I first got into those trades, my thought process. Where am I looking to get out? How am I protecting my risk? What am I generally looking to see to happen throughout this trade? And then every time something happened throughout the process of the trade, I would re-record my thoughts and what I'm thinking and the adjustments that I'm making. So it's probably the best video I've made on a live trade walkthrough where I'm really trying to teach the lessons in real time of how to implement this methodology. So that being said, watch this entire video. It's a little slow getting started because I'm trying to lay context for the trade and what I'm thinking, but it really starts to pick up around the 10-minute mark and you really start to see things start popping off on this trade. And it turned out really good. Maybe it was like 370 some pips, I think it was. So it was a great trade, one of my biggest ones for the year. And I'm happy to break down the lessons in this trade so that you can take those same lessons and apply them as you're implementing the master pattern methodology. Enjoy. What's up, guys? Wade here. So I wanted to make this video based on a trade idea that I'm tracking right now. Thought it'd be a good lesson. I think it's a good opportunity. And this one really kind of falls in line with my personal style of the opportunities that I'm looking for. So I'm on euro dollar right now. I have a 30-minute chart and I have the daily chart. And the idea is that we're going to trade from where we are right now up to this level up here. Now, will I get there all the way? I'm not totally sure. We got to see how it progresses, but that's where I think the ultimate target is headed, to that general area. I have took a couple of trades up on the breakout here. I actually took one short here and then that was based off the daily direction. Then I took a long here based off the weekly as a directional bias. And I will rarely change my directional bias reference time frame like that. I just was pretty confident on the long side right here. And you can see it worked out pretty good. So, and I put that trade in the trading floor in the community and wrote up a little bit of a narrative about it. But here I'm back at it and took one right here, took a little bit of a loss on this one. I think a lot of people did, was trying to build into the direction, got hit on this spike, got out, got back in right here, took a little profit on that, but I decided to wait it out a little bit more. But then as we had this activity happen right here, that kind of gave me confidence to kind of get back in the game on this one. So that's what I've done. So now I'm basically, what I'm doing is I've built in two positions going long here, and in expectation of riding it up through this expansion level right here and up to my profit target potentially. So what I'm trying to do is build inside this range. I think that this was ultimately stop taking. And so I wanted to kind of let that kind of ring out and see what would settle out after that. I've seen some of that happen now. And I'm growing in confidence that we're going to work ourselves all the way back up through this expansion line right here. So that's my goal right now, is to carry as much buying power and as many positions as I can up through this level. And then once I get up through that level, I'm going to look to protect my downside and protect the profit that I have. If we get up through that level, if I throw on the scene crosshairs here, you'll see where that is on the daily. If you look over to the left chart, you can see that on the crosshairs, that's right above that expansion line. So I would love to see coming into Monday that we get a move up through that level, and that I'm able to protect my downside with a decent profit at that point, and then look to see how the daily starts riding up through that level and see if I'm well on my way up to that profit target I'm looking at. So that's what I'm looking at. Everything's in my favor too. If you look at the monthly chart, you can see we're kind of starting to crawl out of this consolidation area. We're long on ATS trend. It is not a far stretch to reach up to this high on the monthly. And I think we're kind of primed to do that potentially. Again, it's not a guaranteed, but it's an idea that I'm working. And then we have our weekly chart. Same thing on the weekly chart. it's not a far stretch to jump back up to this high right now. So that's kind of what I think overall is a good thing that could potentially happen. As far as my risk right now, I'm kind of protecting myself at the bottom of this kind of cycle that's panning out right here. I really wouldn't want to see it trade aggressively through that level, so I'm protecting myself there with relatively tight risk, and want to see if I could just get this thing to work itself up. I really want it to hang above this minor framework box right here. You can see that we came and touched that right here with these candles, touched that price level. So I would like that. That is a clue in my favor, and I would like that clue to hold, and that's what's really helping me form some sort of boundary for my um, initial downside and my risk limit. So anyway, that's what I'm looking to do. We'll check back in, see how it progresses. This one may take a couple weeks to play out. I'm not totally sure, but that's what I'm looking to do. So we'll see how far I can take it. If we do get it up to that level, this will be a pretty much like a knock it out of the park trade for me. So I'd be super happy with that. But we'll see. See how we could hang in there and see what kind of information we get as it goes along. All right, it's Monday, August 12th. I'm checking back in on this Euro USD trade here that I've been running. Just came through the over the weekend hold and just checking progress. So let's see what's happened. Not a whole lot's happened as of today. We had some medium news come out just a little bit ago, but didn't really do anything. But overall, everything is shaping up about the way I expected. There's not anything surprising that's happening here. If we jump over and look at the daily, you can see that everything's closing blue here. It looks like we're going to close out today blue as well, which is all a good sign. And ultimately, what I mentioned before is what I'm still looking for is I'm looking to get above this expansion line right here and close with the daily up in this neighborhood. And I'm hoping that happens. It's Monday. I'd like to see that happen by like Wednesday, ideally, but we'll see what happens. As far as risk management, right now we're going to look at the framework that we're dealing with at this moment. I have a red box right here. I have an expansion line right here, and also have a previous one from right here. So I'm looking at those two levels in particular to manage risk from, and not that I'm going to move my stops up to those levels, but what I want to see, you can see how like these candles came and traded down against this level right here. That's the kind of clues that are in favor of my idea, which ultimately I want the market to go up. So we start getting rejections of those value levels. What does that mean? Like I want the value of the market to increase, right? That's where that's what my trade's based on, is an increasing value market. So if we're rejecting a decreasing value right here, if we would be accepting decreasing value if we traded down through there and held. But the fact that we're rejecting a decreasing value at that level is a good indication that my trading idea is intact still, right? So I want to take that area where I have these rejections right here, and that's going to be a big point of interest because I want that to hold. What I don't want is I don't really want the market to come trade down through these levels super aggressively at this point. I want it to continue to make progress up from there. So that all being said, where I have my stops right now for the moment is they're actually just below this minor framework box that's right here. I have them right there. And because I think that there's a possibility that the banks could drive price down to liquidity right here and then go back up from there. That's kind of a worst case scenario. So either way, what I'm trying to do is I'm trying to give it room with my two positions so that if we do come back and interact with particularly these two levels of framework, that I could give it room in this range so I can get information from that. I don't want to just immediately have it go to that level and then just get out of the market. So the idea of putting my stop losses down here is not necessarily that I want to use them, but this is pretty much if we trade below this minor framework at this point, that's where my idea starts to fall apart. So that's where I'm going to keep them right now. And then once we get above here on the daily, above this level, then at that point, then I will start to look to lock in, some level of profit because now we're starting to get that bigger move on the daily that I've been looking for. So anyway, that's where it's at. And we'll check back in when there's something to talk about. All right, checking back in on this trade, and the market has finally made the move that I've been waiting for. So that's all playing out nicely. So what's noteworthy right now is now that it's put my positions pretty decently into profit, how do we protect that? And we want to go off of what the framework is saying to do. So right now, remember, this was the benchmark price, this expansion line right here on the daily that I said we need to trade up through. You can see that we pretty much gapped pretty hard through that. And so that's a good sign. That's pretty much exactly what I was looking for. So what we want to do is I really don't want to see the market trade much below that level. I don't really want to see it trade much lower at all, ideally, but we have to go off of the framework and how the market kind of stair steps up and down these significant levels. So instead of just putting my stop loss just like right here at this level, what I want to do is I want to go over to the 30-minute. I want to find if any framework on the 30-minute kind of coincides with that same level. And we did talk about this one right here because this was part of our basic strategy, was getting back to this value point right here. Remember, I said that ultimately if the daily holds long, it's not a matter of if, but it's a matter of when we're going to revisit this exact level. We did that today. Okay. That was our base hit profit target. I by no means wanted to close right there, but I knew that if I bought anywhere down below this line and held that position and the daily held a long trend, I knew that 100%, as long as the daily holds, I'm getting back to that level. So now that we've gotten to that level and then we had a big move above that level, now this is going to become my key interest point here to want to see that the price really holds above. And I think there's a good chance it will because the market has moved so aggressively to the upside. So we'll have to see coming into tomorrow. But also this level does coincide. We'll put on our sync crosshairs. It does coincide with, it's a little bit above it, but the if you look at the sync crosshair on the daily where it's showing the daily expansion line is about right here at this price level. And this one's right here, just a little bit above. So this gives me some framework that the market has obviously significantly traveled through to now monitor progress by. I definitely ideally wouldn't want to give back as much profit as I'm in right now, coming back to that level and coming through. But I know that I can pretty much safely monitor the progress of the trade from that point. So that's really what I'm going to be looking for. So as of right now, I've put my stop loss just above break even. And that might, again, worst case scenario, if it trades back to this level, I want to still give it some room to interact with that because it could trade back here and then go back up again from there. So I don't necessarily want to just move my stops to this level. But anyway, I just want to give them a little bit of room that if for whatever reason we do come back and interact with that point, that I could see what the story is unfolding at that level. So that's it. That's pretty much what we're looking for here. So I caught a good piece coming down on this move right here, caught a good piece coming up, missed this one right here, but hopefully this is going to be another big one like this one was here, going up to my ultimate profit target, which is all the way up here. And that's based off of this daily institutional level that I have right here. So that'd be awesome. If that is the case, this will be a pretty good one for, over the last few months. This will be probably the biggest one. So these are the kinds of trades that I always say, if you are monitoring one pair and you're just kind of lying in wait for the opportunities to come, these are the ones. This is where specializing really makes a huge difference, because a lot of guys will be chasing a lot of opportunities in a bunch of pairs, but by sitting here and babysitting this, I had to go through some sideways days here on the daily. I took a little loss right here. I had to kind of battle it out, but I'm also first one to be here to take advantage of a potentially big opportunity like the one I'm in right now. Whereas I didn't go through the sideways market, get bored, be like, oh, whatever, go chase something that I thought was running, only to find that was going into a consolidation or contraction phase on the higher timeframes. I sat here, I stuck with the euro dollar, and now I'm getting the rewards of that. So anyway, that's kind of what I'm looking for to happen at this moment. So that's it. And you can see that the sentiment too, just as another thing to point out, sentiment that people are retail is predictably shorting heavier and heavier against this. What are we at? Retail is roughly 80% net short right now. So that is great confirmation that this thing could still be running for quite a while. So anyway, that's it. We'll see what happens coming into tomorrow, but really that's it. This is really the lesson here is the benchmark price is this expansion level combined with the daily over here. Want to stay trading above that. Definitely don't want to give much back below those levels. And that's it. That's instead of just putting a traveling stop like some people would do, we're going off of the framework. We're watching the story unfold, and we're making adjustments to our risk management based off of the interactions of framework. And then when we get new framework up at these price levels, hopefully, then we will start to look at clues based off of that new framework as well. So that's it. We'll see you on the next video. Hey, how's it going? So it's been a few days since we have checked in on this trade, or at least I've done a video about it. So just want to kind of walk you through what's happened here and kind of how I am starting to approach that. So last time we were talking, price was up around here, so it was definitely taking off and working out well in my favor, going with the daily direction, so all's good. So we've had several events happen since then. So let's walk through that. After that, we had this contraction box form right here that turned into a major framework. We had another piece of major framework here, and this put me up pretty good in the money, but it wasn't to my profit target, which was ultimately up here. So was still holding on to this, and this was hard too, because I was looking in our community, had a few people I think that took this, were in the same trade. A couple of them get out here towards the top, but it wasn't. I'm looking for a pretty big trade out of this. So I was thinking about, oh man, should I just take it off the table? But I thought, I think there's a good chance I'm going to get to my profit target. So I just hung in there. But here's the thing: when you do that, it was a choice I made. Very well could have taken the profit. I'm definitely was in the profit zone after we had the daily takeoff right here. So nothing wrong with that. But I had to make a choice. And when you're in the profit taking stage, sometimes there is, for lack of a better term, sometimes it's a little bit of a gamble or a roll of the dice. In this case, I chose to roll the dice to see if I could get a bigger trade out of it, because I feel relatively confident that we're going to that level. And anyway, it took me on a bit of a ride, as you can see right here. So we went up, traded up to this high, and had this framework form here, this one down here, traded down below, then it kind of went sideways. Then we had some news come out here and spiked the market against trend. And I know a couple of people got stopped out on this, but I haven't moved my stop loss. My stop losses are still down here based off of protecting my entry position. I'm basically moved them to a little bit above where I would lock in just a little bit of profit. But I know in these situations, I've been through this so many times, that when you're going for these really big opportunities, that you got to give it room to do what it does. And so while this is irritating, I expect stuff like this. I'm not surprised when I see something like this. Like, I've seen it so over and over again, where you think, yeah, look at, we're undervalued. You think the price is crawling back towards it, and then wham, it's never quite that easy most of the time. So I account for stuff like this, and that's why my stop losses were where they were. But I also remember what I said before, was that once we get through this level right here, I told you that I'm looking to hold above that. And that's because this level, if we throw in the sync crosshairs, this level coincides, it's at a similar price level as that daily expansion line right here. So you can see that right there. So that is why I'm really looking at basically not trading below that level. And you could see how this ended up working out, is that it traded down all the way to that exact expansion level, stopped, and now has been crawling back up. So this would freak out a lot of people when that happens. This would really scare a lot of people off. But again, if you are trading the master pattern, you're used to this kind of stuff, you know that what ended up happening here was this framework right here that established itself after this big move up. You know that basically as we gapped through value right here, and now we're climbing back up, that this right here is just another leg on this cycle. So we came down, traded through the swing low point, the liquidity, that liquidity was harvested, and now we're coming back up to the highest value point in the trend. And so that's a cool thing about when you trade based on market value and not just on general patterns, or all the other indicators and all the stuff. I had a pretty supreme level of confidence that I would crawl back up here as long as a daily hold. So yes, I was watching it very closely here, because we were also at the daily trend line, as you see over here. Yes, very closely. And it would have been irritating, to say the least, to get stopped out right here after I'd seen such a decent profit. But again, sometimes you roll the dice on that stuff, because I have my my out that I'm looking for. And if I would have got stopped out and this would have been a market reversal, then you know what? That's just the way it goes. But as of right now, this has happened. And what's good about what's happened now is that because we've traded back up above this liquidity level right here, and now we're back right up, we close the week out right here above this fair market value. This market is set up pretty well. It's not guaranteed, but it's set up pretty well to spike probably coming out of Sunday into Monday into Tuesday when the market's open and fulfill my ultimate profit target up here. There's a good chance. So it's kind of like you think about it like you've survived kind of like the death blow to most people, but also I'm getting a massive amount of information that from this that this was a heavy accumulation tactic from the bank. So anyway, it's bad because it sucks to live through, but it's good because you got to look at it like what information did that give me? That's really the important thing to take away from it. So that has basically given me an even more higher level of confidence that this was the kind of the charging up that the market needed, that the banks needed to push to my profit target, ultimately all the way up here on the daily. So anyway, that's it. That's what's happening. So as of risk management right now, I'm really, you can see that the range is basically trading between this fair market value here and this one right here where we hold, where we held. What I would like to see is I would like to see us trade coming into the market open next week above this level up here and maintain. That would be great, but I am prepared for it to dip back in this range to some degree. I don't really want to see it trade much below like the halfway point between this expansion line and this expansion line, which is about, let's call it 70 pips. So we measure like 35 pips into right here. I really don't want to see it trade back in here. And notice what else is right at that level is that liquidity line right here. That was the accumulation point. That's where we ask the question, what is the bank going to do with that liquidity? We have it there. They hit it. What are they going to do with it? So I really want to see them hold above that level ideally now to make this clue of accumulation as part of the story that I'm working of my trading idea. I really want to see that hold. So anyway, that's it. We'll check back in coming into next week, and hopefully we get a nice move into the open on Sunday for me, into Monday and Tuesday, and we're talking about a massive winner for me early next week. So we'll see how it goes. Hey, welcome to Monday. We're checking back in on this trade. So everything's progressing very well. I had another update today, so everything's just moving towards my profit target that I've been waiting for here, where my take profits are for my two trades. And yeah, it's been good. So held over the weekend, wasn't super painful, which is nice. Turns out when you trade in the overall prevailing trend direction, you don't have to sit through very much pain. So that's always nice, right? It's a byproduct of good practices. So we're almost there. I'm about 30 or so pips away from my ultimate profit target, as you can see coming up through there. So the question is, when's this thing going to be done? I hope soon, honestly, because I'm sick of dealing with it. I would like to be done with this, wash my hands, book the profit, and look for another one. But as you know, and as I well know, I have zero control over that. I can't control how far it goes. I can't control when it moves. But I certainly can control how and when I interact with it. So that's really I'm focusing on is the architecture. I'm focusing on I'm trying to keep pace with what's the new information. So looking at it, I'm looking at the daily candle right here. And if we measure the daily range from where it is right here at the top to the bottom of the candle, it's about a 50 pip range, which is not a huge day, all being said. A big trending day is going to be like 90 to 100, 120 pips are the bigger days in Euro USD. So right now, it's considered kind of a medium range day. I would say like a low or a small range day would be like 30 pips or under, top to bottom. So right now we're in a medium range day, but that could continue to expand into a bigger trending day. So I'm going to see what happens. But as of right now, I'm at the high of the day still, making new highs. We just came out of an expansion here. I'm just looking at the 5-minute chart just to dial it down, but let's jump over the 30-minute chart here. Because that's really that's my main chart that I go off of for entry. But it is possible that we can continue to expand up to to that point out of that 5-minute expansion box and out of that range, which would obviously mean that the 30-minute would just carry through. So we'll see, but it is a little late. It's 10:49 right this second, my time here in California. So we'll see if that happens. If we do get some decent movement, I probably would take it if we get up in the range of my take profit. I would probably take it off the table because I don't want to go sit through another sideways market coming into Asian session and then go through London and then have to go through a dip back. If I get anywhere up close, I'll probably just take it off the table because this one's already like super like knock it out of the park trade for me. So I'm good on that. But yeah, we'll have to see. One thing that I think is worth talking about though, that because I like to weave lessons into these when I can, is looking at the way this is making highs right here. And if you see right here how the market looks like it's just kind of dying out right here, a lot of traders would look at this price action and they would think, oh, look at like it's running out of gas. You can never just look at a candle trying to barely make new highs or make new lows like that and think it's running out of gas. That can turn into a massive problem. Because as you see right now, it felt like it was running out of gas, but now we're starting to spike up past. And it very well may range back down in here. That's definitely possible. But this is a big problem where traders try to trade against the trend, or we call it trading the fade, is that they'll see the market kind of struggle, what looks like it's struggling to make new highs or new lows, and it's making them, but it's not really showing any really good follow through. And then they start shorting. Big problem. And you could see that reflected down here in our sentiment right here. This is our sentiment numbers. And you can see right now retail sentiment is roughly 85% roughly of retail traders are net short on euro dollar based off real account data. So what does that tell me? It tells me that you have people continually for so long, all this time, have been trying to call the turn. And this is typical. This is why retail traders just get ran over and they miss all the big moves because they refuse to trade in trend. They got to have the tops. They got to have the bottoms. They got to have it all. By giving up one side of the market, which is like the most important thing that I teach, which is directional bias, by understanding the directional bias and just taking what you can out of it, forget about trading against a trend, forget about trading ranges, you just trade the range in the direction of the prevailing trend, then you are always in line for stuff like this, right up to the moment that we're in right now. And so taking a look at the sentiment, what I also want to mention about this is that the sentiment, the way that if you're using a sentiment indicator, is that it's all about the stop losses. The market's going to go towards the path of least resistance. This is what we learned back in the day from Richard Wyckoff and Jesse Livermore. This is time tested, forever true stuff of the market. And the path of least resistance is trader stop losses. That's what it is. So if we know that all these traders are loading up short, what are their stop losses? It's buy orders, right? And those buy orders are going to be up above every single high every time it makes a new high. And that's why the market continues to inch up. It's the easy liquidity. The stop loss is always the most predictable, easy liquidity in the market. And that's why the banks hunt it. This is just gravy. So anyway, that's why I say like they could literally just keep harvesting stops and letting that push the market all the way up to the take profit level here. And I think it's certainly reasonable that the daily hits that. I think it'll probably go beyond that, but I don't care. Like from where I'm in down here, I'm going to catch, probably the majority of this leg on the daily and I'm good. This is like what I mostly look for. I look for a handful of these trades, basically, maybe like 2 or 3 of these opportunities a month if they present themselves. But this is mostly what I like to do personally. So this would be a great trade to catch that big move on the daily. And I got a very sound level to take profit at. Yeah, and that's it. It's very repeatable and there's no surprises here. So anyway, that's where we're at. So the next time I'm checking in, hopefully it'll be when this trade is over and I'm getting out of it. And that'll be that. So hopefully you're learning a lot so far from watching me go through this, and we'll see you here in a bit. Another thing I'm going to do real quick that's worth mentioning, notice that ATS trend right here has now followed. It's following the inefficiency left between these candles right here. So that's the new price level of kind of basically my where my directional bias starts to change. So what I'm going to do is I'm going to go ahead and I'm going to grab and move my stop losses up to that level here for the moment. Actually, I'm just going to go just a hair below, like right about there with my 2 stop losses. That's just in case, for whatever reason, the market comes and just spikes against me. Obviously, I this far into it, I want to be able to lock in that profit up to here. So, and then also too, you notice that kind of coincides with this expansion line. So that's the thing with ATS framework. As you map this out, whether you're doing it manually or you're using our software, you want to look for correlation between expansion lines, between ATS trend, all that. When you have lines that correlate and they tell kind of the same story, then you can basically put a little more weight on that level. And that's why, we were looking for this as a profit target. The fact that we held above, that was a great clue right there. And then it traded above gives me the idea that I want to add more weight to my ATS trend line where it's setting right now, right there. So anyway, that's just want to mention that, kind of tie that lesson in here as well. All right, this is it. My trade is finally done, and I finally closed all my positions. So let's recap kind of what happened here. I started down here, these 2 positions here, and built the 2 positions on this day right here, expecting that we were going to gap up through this level right here in the direction of the weekly. The monthly, everything was in my favor. It gapped up exactly like I thought it would, came down, tested ATS trend right here, and then went on to a nice run up to my profit target, which was all the way up here at this level. And you can see I close out my trades pretty much exactly at that projected take profit level. So everything worked out extremely well. Looking at the 5-minute right here real quick, this trade was based off of the 30-minute into the daily, and then I'm looking at the weekly and the monthly directions just for, to see where the wind is at my back, or if the wind's at my back. Today, though, I got up early because I knew I was approaching my profit target, and I wanted to monitor things very closely. So we had this expansion box, or this expansion line form right here, contraction box right here. We broke out right here, and then we dipped below expansion. So I opened up one more position right here off of this liquidity and caught that up. And so this was kind of basically a shorter term scalp that I kind of just put on top of my other 2 positions. The way I see it is the other 2 positions financed any risk I would have right here to a pretty high degree. And plus I'm super in tune with this market. That's one thing, is like when you only trade one market on pretty much the same time frames, you start to really understand its ebb and flow. And so since I was so in tune with where the daily was headed and the 30-minute, I felt reasonably confident to jump in on this 5-minute trade because I knew we were really highly likely to break this level. And at that point, we had not broken my profit target yet. We did after we came through here, right up to this order block projection on the 5-minute, but we had not. So I thought there's a good chance that we're going to break that, and I might be able to catch a handful of pips coming up through there. And I also thought it could, we could see a big snap up through this level, which it snapped a little bit, but nothing like crazy. So anyway, I took that up there, saw a decent profit on that 3rd position, came up to the order block projection, but I was thinking what anyone else would be thinking. I wonder if we're going to snap. I wonder if it's going to go. And then I ended up closing the trade with a little bit of profit on the 3rd one, which was about 8 pips or so. So not great. It's okay. I think I saw about 19 pips on it. So I ended up closing it out. And it's funny too, because here's a lesson in this too. I always say that people, when they're in pleasure, they don't close trades, and then when they're in pain, they close trades. So you think that's a reason why I was thinking, can I snap this order block projection and can I get another boost through this level? And so it's like, I'm no different than anyone else. So I'm looking at that and I'm like thinking, I wonder. And then look, it turned on me hard. Then I'm looking at, okay, let me see if it breaks ATS trend. And then it did. And then I got out. So even though I made a profit on that last trade, it's still the pain of now giving back my profits that close it out. So again, this is like, no one's really ever going to be able to get over the dynamics of pain and pleasure and how they control when we get in and get out of trades. We have to just work within them and account for them. It's just a human nature thing, and you just got to know you deal with it, and you got to work around it. So, and that's usually by trading smaller than what you want to trade, so that you're able to weather the storm. So that brings me to the next thing that I just want to touch on again, and I talked about it earlier in this video, which was I think the biggest test here in this whole trade sequence. We go over to the 30-minute. Was this move right here? This was difficult right here. This was probably the biggest test of the entire of this entire experience going through this trading idea. But the framework saved me. You know, I had this expansion line right here. I had this liquidity line, and those two things prompt me to ask the right questions. Those held me in the trade, and I still, even though I had this happening, I'm still grounded in the daily direction. I still had ATS trends showing me where the momentum was, showing me the sensitive price level, where the trend would change. And so if I didn't have those things, if I was trading blind, or if I was just had moving averages or some MACDs or some traditional indicators, I would not have been able to talk myself through a very logical process of dealing with this snap down right here. And that's the difference when you're trading with framework and you're watching the framework build as in real time as the market unfolds. You get new pieces of the story, and in this case, I was able to come to the right conclusions with that, and that held me in up through this level right here. And there was part of me that wanted to just get out right here, but I stayed true to my target on the daily. I always want to know where's ultimately the daily going to reach for, where's the weekly, where the monthly headed, and that, you know, I shook this off and held in right here and held strong up to my profit target all the way up to here. So. But yeah, that was it. It was a great trade. Whether you are mapping, you're mapping the 3 market phases manually, or you're using our software. Hopefully, this tutorial walking through this will help you in your future trades and get you to see what it's like living through a trade like this. So all together, let's count up the pips. So I had 2 trades down here up to about here. So we have basically 183 on the first one, and we have 174 on the second one. So plus this little one right here, which was like, what was it, 8 pips? So that's 365 combined pips on this. And this is why I like this style of trading personally. I'm not telling you guys what to do, but this is really why I like this style, because there's so many ups and downs, so many decision points when you're trading just a 5-minute chart or you're trading something smaller. Whereas if you trade the higher time frames, if you just know where the banks are headed, you know where they're moving their money, because they move their money over days, weeks, and months. They don't move it a minute at a time. Get in, get out, get in, get out, unless it's their market making, they do. But their proprietary trading, where they really make the big money, it's slow accumulation, slow distribution. And so this is really why I like following these daily moves, because you're not going to see, 300 some pips, or even just if we just measure the distance, you're not going to see 180 pip distance in a day trade. You're going to see 10s, maybe 20s on a 5-minute chart. But then just like I had my little scalp I added here at the end, I saw a 19, I took an 8. That's the reality of that stuff. Whereas trading higher time frames, you can really just catch these huge waves in the ocean based on the bank's momentum. And that's what I think that the daily, the weekly, and the monthly, those are showing you the big currents in the ocean. And when you position yourself well and you hang in there patiently, this kind of stuff happens. So this was a great trade. This is definitely one of the biggest ones I've had this year. And this is kind of what I wait around for personally. So anyway, hopefully this was helpful, and thanks for hanging through this trade with me, and we'll catch you on the next one.